Good morning, traders. Welcome to Before the Bell, your home for actionable pre-market content. This is Chris Buss with Traders Profit Compass with your morning look at markets for Monday, January 31st. It's 6:45 a.m. as I'm starting the video. Taking a quick look at futures. Oil's up 0.8%. The rest of the equities look pretty much flatline. Little red here, a little green there, not a whole lot to see at this point. On the macro front today, pretty quiet as well. We've got Chicago PMI, we've got Dallas Fed, we've got a couple of FMOC speakers. Got a busy week of earnings, but not a lot today. We've got Otis before the bell and NXPI in the semi space after the bell. I encourage you to look at on the blog site for the calendar. We've got a lot firing up tomorrow. We've got ExxonMobil, UPS, Pulte Homes, AMD, PayPal, Google, and then we've got other FATMAAN names later on in the week. So it's going to be a really big week. So let's dive into it. Got a lot to go. We had a very encouraging session on Friday. The key now, of course, is follow through on what looks like kind of hammering out a bottom look on Friday, but of course they could easily take it down and foil that setup. But let's see what we got. A real big development over the last couple days in my mind is this big breakout on the US dollar. We have been grinding higher. We had some consolidation. We moved up, long consolidation, and then this looks like a bear trap, fake breakdown, and then just zooming right past the back into the box, back up to the top of the box, and then a breakout. And remember, the key thing here is in the developing world, of course, they've got a lot of their debt denominated in US dollars. When the US dollar rises, that makes it more difficult for them to repay those loans. And so if this thing keeps going, what you're going to hear on CNBC and other sources is, oh my God, the 17 trillion and foreign denominated US dollar denominated debt in the emerging markets and blah, blah, blah. This is kind of like the last thing the Fed wants to see is a really strong runaway dollar. And the thing technically, one, we just broke out of this consolidation range, so there's room to run. And two, take note of the PPO bull cross that's just been put in right at the zero line after a long momentum reset. This kind of coils the spring, if you will, on the momentum, where you see a big rise, momentum comes out, but nothing really happens to the price, and then it resets with a bull cross at the zero line. That's usually a very, very bullish type setup. So moving on, we were down on the VIX on Friday. Of course, I think you need to keep that front and center on your dashboard and just look for a daily trend. Is VIX falling or is it rising? And the one thing that is usually a kind of like a yellow flag is if you see stocks green and VIX green at the same time. We've seen that before with VIX rising along with a rising market. That's usually a warning flare. So take note of that if you see it. We've been following these oscillators very, very closely. Here's the NYSE oscillator that had got blown out to minus 90. We have been looking for a bounce. We got that on Friday, working its way back up to minus 57. I would show you the NASDAQ oscillator as well, but for some reason, Stock Charts is having trouble updating that one. But I would assume that it got a similar bounce. Now, what we want to see, of course, is follow through to drive this oscillator back up into the midpoint of the range, have price on the indexes move up into resistance zones. So I'm hoping there's a little bit of room to run. And I'm going to try and find the chart here for you right here. This is the percent of NASDAQ stocks above the 50 EMA. And look at the positioning of this chart. We are down here at, I'll call them more or less historic lows. Only 10% of stocks are above their 50. The only other time, you can go way back in the chart, probably back to the, I haven't done it, but I'm assuming back to the GFC back in 2010, where you got lower. But you can see here at 10%, we got down to 3% in COVID, and we got down to 7.5% in that Q4 2018 rug pull. So can we go lower? Yeah, you've always got to be prepared for the unexpected, but we're pretty darn low on the scale, so I'm hoping for some follow through on that Friday bounce. Let's go through the indexes. Here we've got the SPY daily, and what I've done here is kind of in purple show you that what I think is a bottoming formation. We spent 5 days. You can see the 5 candles here. We had that, I think it was Monday, the big flush down, and then through the rest of the week, this 432.5 proved to be a level where the bears could not break it. And then Friday we got this nice up move. So to me, that looks like a bottoming formation. Now today, you can see that we've bounced up on Friday to this 442.5. I think that's your pivot for today. You can also see that we recovered the 200 EMA. So depending on how you want to trade it, you could set a stop just below the 200, or if you wanted to give it more room down here at the prior low. I think the 200 is a good level if the bounces for real. I wouldn't expect SPY to come back and close below the 200. That would be, in my mind, a warning shot. Let's move on to the 2-hour. Here again, some productive developments. The main one being we broke the 2-hour downtrend line, and with a nice impulsive candle on Friday. So now, again, this 442.5 I think is a good pivot level, and I think with any luck, we can get up into the 450 range. I think above 450, it's going to get tougher. Remember, that was the lower bound of this $20 trading range between 470 and 450. So to break back above 450 would certainly be a feather in the cap of the bulls, but I think it's going to get tougher at that level. And keep in mind our Fibonacci retracement levels off of this swing high to the swing low. That would put us in the 618 retracement level up here around 452. So those are the upside levels that I am looking for on SPY. Here's just a zoom in on that on the 30-minute chart. We had this nice triangle form, and we broke out of that Friday. So now if we can break above this value zone, if you will, it gets a lot easier up here because you see holes in the volume over price profile. And really the next big level on this chart is 448. Same kind of idea on the NASDAQ, on the QQQ. Spent a lot of days trying to break 340, and the bears could not do it. A nice low here. We bounced up. We're able to take out 350, but big picture, still well below the 200 here at it's dropped down. It's 363 now, but you can see it right on the chart. That's going to be the first really big test for the Qs on any bounce into the 200 from below. And if it can take that out, then a lot better chance for the Qs to have more of a durable rally. But if we get follow through today, just watch and see how the Qs handle the 200. What I want to show you here, that a couple of the things that I'm encouraged about is down here on the 2-hour chart, we had what looks to me like a double bottom low here at 340 with bullish divergence. Notice at the second low, your momentum was a lot higher and your RSI is a lot higher. And what would trigger the formation is a break above 355, and then you'd have that one leg of the W. Here's the short leg higher, the short leg lower, and then the right leg of that classic W double bottom formation. And what gives me more confidence about it is we do have the bullish divergence present. And so I would definitely, if you're not in, have an alarm at 355, and I would definitely be a buyer there. And remember, the measured move target is going to be the height of the W. So from 340 to 355 is 15 points. 15 points added on to 355 is 370. And then that aligns really well with this resistance zone and the 618 fib retracement level. And here you can see that W formation on the 30-minute chart as well. And here again, you've got a clear line at 370 as a level of resistance. So you break above 355, you've got some work to do at 361, 362. That's where the 200 comes in. And then you got 370 above. Same look on IWM. Did not really get the big impulsive candle like we did on SPY and QQQ on Friday, but we have put in a low here, and you can see, actually, I'll go through this one, but I wanted to show you the double bottom look here at 191. where they tried to break it, couldn't do it, put in a false breakdown and broke back up. What I really want to see here is price take out the 2-hour downtrend line. I think that would be a big accomplishment for the bulls to break it above 197.50. And if you're any kind of a small cap trader, that's where if you didn't get it here on Friday, I would wait and make sure that price has the power to break it out here above 197, and then you can get long. Here's another look on the 30-minute chart. You can see the divergent low breakdown here. So we had a low with RSI here and here, and then we broke price lower, but with higher momentum and higher RSI, giving you that bullish divergence. So, but I think the key is going to be to take out this downtrend line. Facebook had a double tag down here at 290. Nice bounce in the back half of the day. It's really got to take out 305 to get going. So I think that's your pivot for today on the daily chart. And then from there, you can look for 315 and then that 325. Apple had a really nice day. I can just see here I neglected to put on the opening gap, which you have down here from 163 down to 159.5, but came up through this resistance zone, managed to break above 170. I think your next resistance zone is going to be 172 to 173.5. I think price could potentially pull back into 169, 168.50, where the 50 EMA resides, get a little kickback, then acceleration, but really nice bounce in Apple. Tesla, 860 looks to be your pivot. We do have a little bullish divergence present. Notice that we had a low here with momentum here and RSI here, and now we went and made a lower low, but with higher momentum and higher RSI. It's not dramatic, but it's there. I think with a break above 860, you could get long there, and just you're looking for a move back up to the top of this down channel. And then any breakout above, say 920, 925, then you'll have an open door up into the 975 area. Microsoft had a nice day. Came back to tag this 295 and then made a sharp move higher. I think 310 is your pivot level. And you want to see price hold this 306 level on Microsoft. If it can do that, I think it has a fighter's chance to get up here into 318, 320 range. And something happened here on my charts. Moving on to Amazon. I haven't updated this pivot, but you can see if it can break above 2,900 and then break the 60-minute downtrend line, has a chance to move above 2,950. And remember, maybe I can show it here on the daily chart. 2,950 was the bottom of this big $600 wide consolidation range. So that's going to be really really tough resistance. But if it can break above, that would be very bullish and open up a move up towards 3100, 3175 in that range. Google had a nice day. We've got a rising trend line. We can see that price broke above the 1 hour downtrend line. And so now your next level of resistance is 2680. I think you can use that as your pivot this morning. You may have some resistance here at 2700, and then you've got an open gap at 2750. Netflix is still consolidating after the $100 gap down. I think you can use 385 this morning. I think there was a news flash out on Friday that Reed Hastings was doing some buying. We know about Bill Ackman buying. Maybe that will serve as a sentiment booster for Netflix. And whether or not you want to mess with it here as it toggles between 410 and 360 with a midpoint at 385, I would certainly have 410 alarmed, because there you've got the $100 gap opportunity if it were to break back above. Let's wrap up here with semiconductors. Again, look at the divergent low. Had a low here with momentum here and RSI here. And then we made a lower low. There's your divergent low with a rising momentum and a rising RSI. That's your bullish divergence. Notice this reversal candle right here. If you want to look up that candlestick, you can look up, I always learned it as a Pinocchio bar, where the second bar calls the first bar a liar. But I think in true candlestick parlance, this is called a pipe, P-I-P-E, pipe bar. And if you Google pipe candlestick, I think you'll find a write-up about it. And usually where it occurs is after a steady and sharp downtrend, you get a reversal bar equal to or greater than the last breakdown candle. And usually that's pretty bullish. So I think today you can use this 260 as your pivot with a pretty good amount of resistance at 263. I think if it can break above that, then it bodes well for a potential run back up to 275. So let's wrap it up there. I think it's going to be a kind of an important day. We want to see follow through on the emerging bounce from Friday. I think it's important. We got to hold the prior lows. If you had anywhere to mark on your chart, I would mark those prior lows in whatever stock you're trading, whether they're the FATMAAN names, the indexes, really any name, because you break a prior low, then that's going to bring in more sellers. And you've got to, at least on a short-term basis, set aside your ideas about a bounce and oversold conditions. Oversold can get more oversold. So we have the oversold conditions as a backdrop, but that's only a backdrop. Price is the final arbiter. And so we need to hold those prior lows. And as long as we can see higher lows and higher highs, then we got a chance at a decent rally. So I hope you found the analysis helpful. If you're new to the channel and you appreciated that type of analysis, giving you objective levels to trade around. Please hit the subscribe button, the alarm bell, the post notifications. Leave me a note in the comments section of any particular name or sector you want me to review. I'd be happy to do that. Jump over in the show notes. You'll find a link to the blog site where you can drop in your email. It takes 15 seconds. Then you'll join the group. You'll get an invite to our trading room. And most importantly, you'll get all my content delivered directly to your email box. You won't have to hunt for it on social media or be worried about if you missed anything. So would be glad to have you. And of course, longtime listeners and members, thank you so much for your support. Please pass the link along to others in your trading circle that may benefit from the work. Let's leave it there. This has been Chris Buss with Trader's Profit Compass. Have a good day of trading and talk to you next time.